Good afternoon and welcome to Options Tender. It is Saturday. Happy weekend, everybody. Thanks for joining us on the weekend edition of Options Tender. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo and subscribe. We have tons of information to go through today. We're going to go through SPX on multiple time frames from the monthly all the way down to the 65. We're going to show some indicators, and then we're going to go to SPY, ES, and then we'll check out VIX at the end. When we get to SPY, we're going to go through three different scenarios. Two are bearish and one is bullish. This is going to be a very choppy week, you guys. Possibly we could get our primary move, and that's not going to show any chop at all. That's going to show, that's going to be a huge drop. And possibly into CPI. Okay, but what the market is showing us right now is sideways action, chop. And I'll show you why down lower time frames. So if this information helps you, please consider liking the video. And in the description, if you want to do a little bit more, there's ways to do that. Thank you for joining us. Okay, let's jump into it. We have SPX on the monthly time frame. Going back to 1929, we have this trend line. We touched it once, we touched it twice, and now we're touching it again. We're getting our reaction off of it. I don't think this move is done yet to the downside. I think we have a lot more to go. We're going to test this channel here, but I really think in the long run that we're going to be testing some of these lows in this channel bottom here. All right, I know that's 25, 26, depending on where you hit it, 2,700. But that's that'd be a great buying opportunity, in my opinion, at least for a huge bounce. I mean, we could go further. But that's not what this video is about. This isn't a doom and gloom video. I just do think we have some more downside. So you're looking at the monthly time frame there. We have our potential reversal candle. We're heading to the downside right now. We don't have any confirmation. We're just kind of triangulating here. We're still above the 8 EMA. So that's something that we have to keep in mind, that the trend technically is still up at this point, even though we're trying to make a lower high. So what I think is we're forming a top. Let's go to the weekly. On the weekly time frame, I have a channel pointing here. The minimum of our move to the downside is towards the bottom of that channel, and I think that's around the 3,300 area. That would be where A, this first wave, then you have a B, and then you have C, a 5-wave impulsive move down. That would be where A equals C. Now, that's not always the case. That's just a typical representation of a correction, A, B, and C, where they're symmetrical. So that would give us there. So either way, we'll probably get some sort of pause there. If not, go to new highs. That would be a flag on a higher time frame. Okay. Now, digging in here just a little bit more, we had our uptrend line. We broke down from it, bounced back up, right into that same long-term pivot from 2018, rejected off, and we're barely holding on to that 8 EMA on the weekly. This is a super important indicator for our purposes, being such short-term traders. I know that we have our IRA as well, but we talk about this channel. We talk about short-term swings and trades, and the swings can be 3 to 6 months, and so these trades are as little as a day trade, really. Okay, so getting it underneath here, bounce back up to retest that trend line and the rising pivot from 2018 and rejecting off of it so far. Now, the question is, do we go back up there to retest it just a little bit higher? Do we just reject off of retracements from this point and go lower? Or, we do have a inside week here. And it's very important. I'll show you on SPY. I'll show you the alternate scenario, but we have an inside week. Okay, so we're holding up. We have this long Maribozu candle here, and we stayed within that range. So it's an inside week. We closed. We'll start the next week inside Will it be a second inside week? That's something we have to consider, and I'll show you why a little bit later on. So stick around for that. Now, going down to the daily time frame. Trend is our friend. We have a lot more information on this one. Okay, and we're going to look at some indicators as well. At this point, we're looking at this trend line was holding. We have this pivot, a couple touches there, and we held on to it here and also here. And so what is this doing? Ultimately, this is just triangulating. Okay, so this is a very valid trend line at this point. We have 4 touches. 4 times price held on to that. Very important. And now we have this not so important, but we have 2 touches on there from the top and a rejection off here, which happens to coincide with that 2018 pivot and the upper trend line from the rising wedge. So it's a very, very important area. And so this represents an important trend line because of that, not just because there's 2 points. Usually a trend line is a lot more important if you have more than 2 points. So now what does that make? We have a triangle. Okay, we're going to show you on the lower time frame a little bit more info about that triangle. But in the meantime, you look at the moving averages, and they're all kind of coming together. You have the 20, the 8, and the 50 all in this area. So that tells me that's sideways trade. A lot of people trade off of moving averages. Well, this is sideways trade. All the moving averages are coming together. You see they're so far apart here. 100, 50, 20, 8. And now they're all coming together. So do we waste time further, or do we make our move? That will be the question we're going to try to answer today. Let's go. Let's bring this. Let's go here. Let's empty this page out. Okay, let's bring up the Williams percent R. This is a new one that I added on there. Now we had our move. We had our move to the downside. We think that's an impulsive move. We have the retracement here. We got that retracement a little bit deeper than I thought, but that's perfectly fine. We got into overbought territory. That's a good sign. And then right at the top there, we made one more move that made a divergence. And that's huge for the Williams R. And we compared that with the RSI, which also had a divergence, and we have our signal. We also had a breakdown from this 80, from the 20 line. That is our secondary signal. We got our signals. We have our reversal signals. So we got our reverse. Now what happens is key. Will we come back up? Similar to this. Got a reversal. Come back up. Well, I think this is a little bit more powerful with these divergences. I'm not sure that that's the case. We may get a little bounce. It doesn't go straight down. Sometimes it does. It looks like we're trying to get a little bit of a bounce. So we'll see what happens going early into the week. Let's put on these. Let's put on the momentum indicators. See if we can read anything off of these. All right, so we're right in the middle. We're neutral. Kind of indicating exactly what we're talking about. We're triangulating, so we're right here at the 0 line on the MACD. That's what that's representing, that we could go either way. And doesn't mean that we're going to go cycle all the way to the top again. It just means that we could move to a certain area, move up, or move down from here. We had our RSI, slight divergence, sell signal right here. We had our crossover, and then we crossed underneath the 80 line on both stochastics. So we have sell signal, sell signal, sell signal. And then we're waiting on the momentum. The momentum is going sideways, even though we have our sell signals on these indicators. Momentum is going sideways. All right, let's look at the ADX, see if we're trending at all. Okay, so we're losing our trend here. We're not trending. We're going sideways, and you can see that represented in the ADX. When we truly start to get our move to the downside, we suspect that we're going to the downside. This is going to rise. It's going to rise. It's probably going to look something like this. But right now we're going sideways, and you're losing that ADX. So it's not representing that we're in any kind of trend, which, again, those are the things that, that's why I'm saying we may waste some time here. We might not get our primary scenario because we might waste some time. We have CPI into next week on Wednesday. That's going to be super important for us to be alert and cautious on any setups. And I'll show you those setups when we go down to the 65-minute. But what some of these indicators, the MACD and the ADX, right here at the 0 line, and losing trend. This is gaining trend. This is trending. This is losing trend. They're telling us that we're moving sideways. And so we have FOMC on the 20th, I believe. We have FOMC a week from this coming Wednesday. So about 8 trading days away. 1, 2, what do we have? 5, 6, 7, 8. We have about 8 trading days before FOMC. Not this Wednesday, but the Wednesday after. And so that could be the triangulation that's going to take effect, and perhaps we go sideways waiting on the Fed to see what the Fed does. I'm not worried about what they say. I don't listen to what they say. I work off of price action. So I'm not here to interpret that for you. Now we hit the top of the Bollinger Bands a couple times and finally rejected off of them. So our next point, for the bulls is to reconnect with it, or the bears want to go down to the moving averages right in the middle, that turquoise there. And that also represents a 200-day moving average. So you will see. I know that's not a good answer. You'll see up top or down here. They're about the same distance away. We're right in the middle. And we will probably get a reaction off of those down there. Okay, so those are some targets to look for. What is that? We're right around the 4,200 area. I do think we go lower, though. I think our chances, we already hit that top point. We did not reverse enough. We did not retest the middle of the Bollinger Bands, yet. So let's check out the oscillators, McClellan oscillator. And we're looking at, let's pull out the daily. We're looking at the trend being broken. So we had the move to the upside, got to the oversold area on this bounce. First had the oversold and the divergence from the top, bounced back into oversold territory, just nicked it, and just, right in that confluence of resistance, started a trend and broke down from that trend. So are we just back testing this trend and heading lower? Possibly. I told you that we had to be careful right at that 8 EMA on the daily time frame. It coincides with the 50. It didn't touch the 50, but we're rejecting off of that 8 EMA. And so that's very important. We could just go down from here if the market's weak enough, but I don't think we have that catalyst yet. So I don't see the market just pushing down on Monday. It's possible, but we have CPI coming up. So I do think this bounce is going to go a little higher. We have a little bit higher retracements, and we'll show you those. And so that would just be the back test of that trend line being broken for the oscillator. The summation, McClellan summation, just shows that stocks are weak. Index just represents that the stock market is weak. We had our negative divergence, headed down, broke the trend. This trend was, if I pull back here a little bit more, you saw this trending to the upside for this entire move, and we broke down from that. So we could, again, just back test that trend a little bit. still keep us in bearish territory and start heading lower. That's our primary scenario. Let's check out ES. No, let's check out SPX on the 65 minute. We're going to skip down to the 65, and then we're going to go to ES and then SPY. So let's change this board over to not the Elliott wave yet. Let's do the 65 minute. And what we're representing here, and you see that triangle, this is what we were talking about, this line here, this pivot held perfectly with those 4 touches. So that's going to be super important. That's going to be very important. If you break down from this trend line, you're going to the next. And that's our channel bottom. So that will be our next spot when we break down. It's not if, when we break down. It might be from higher, but definitely going to get to that point. And okay, so here's our initial move. And that's the bottom of the triangle right here. And then we had our bounce and rejected off of those confluence points up top. So that's our triangulation that we're in right now. We break up from the triangle, we have a little higher to go. And technically, you break out more bullish scenarios, and we'll talk about that if that happens. You break down from this area, and we head to that lower end of the channel that I was talking about. Not in a straight line, folks, okay? Now, what we're looking at right here, why do I have this in turquoise? I have this turquoise highlighted here because this is one of our visual scenarios that that I imagine that we may go through, and that's what technical analysis is all about, is giving you a visual of price action and where, if one thing happens, then this is probably what's going to happen with price. And so that's how we trade. So one of our scenarios is that this is a wedge. This is a initial move, and then we have a wedge that we have to fill out before heading lower. Okay, now there's 2 bearish scenarios, and we'll look at this in a lot more detail on SPY, just so you can get your price levels in place, and you can kind of compare those to what you have as well. We already have a 3-wave move up. That's a corrective move. Corrective moves are 3 waves. Impulsive moves are 5 waves. If we're counting this as a 5-wave move, there's different ways you can count it. Some people, you can count this in 3 waves, but you can also count it in 5. That's the confusing part. That's why the market is so difficult. And Elliott wave's just giving you scenarios. This is an obvious 3 ways up. Okay? So this is corrective. After a move down, we have a 3-wave move up, which means this could be over. We hit all this confluence, we back tested the trend line, and now it looks like we have another 5-wave move. Okay? And that's going to present a problem as well, but in a simplistic way, in our primary scenario, we have another impulsive move. We had our initial one, we had our bounce, and now we have our initial, for this next sequence, 5-wave move down. We're looking for a 3-wave move up. We have a meager little 3-wave, but I think this is the A, B, and then we have an impulsive move for wave C, where we reach this gap here, and we're looking for a move to break down from this wedge, and from this, also from the triangle, and that should be a big move. If we reject from these points up here, and we go lower, they should be much more impulsive and very relentless. If we hold this trend line, this turquoise trend line, and this starts to look like a 5-wave impulsive move altogether, you get the 3 that we're talking about, but maybe you can consolidate up here at the options expected move. So that could be a possible wave 4 if we don't reject hard off of it, and we consolidate, maybe even retest this uptrend and head for one more move up, that could be just filling out this larger wedge. Filling out the larger wedge. And that would just create a bigger A, B, C. Close part of the gap, maybe just the island gap and partial of this gap up here, and then head lower. So that's our secondary. It's our secondary bear scenario. And then I'll show you the bullish a little bit later coming up here. So that's a point of view from the SPX. Let's move over to ES. And this, I do all three because it kind of lets me look at things in different ways. Gives me different visuals. So it's very important for me to chart all of these, SPX, SPY, ES, and much more. I do QQQ. I do so many. I don't do all the ETFs, but most, the major ones. Okay, so we have the same triangle here. That's the bottom right here of the triangle. This is the top of the triangle. Why do I only have the bottom and this other line highlighted? Because I want to represent on the ES that these are the major trend lines that we're looking for. Okay? This is a different scenario, different way to look at it. So what's up above is not important to me. It's holding on to these trend lines. Just a different tactic. So we break down from this trend line, no matter what happens up here, where it goes, we break down from this trend line, we go further down. We break this one, we go much further down. Okay? So I'm just giving you a different visual. That's it on ES. I'm not going to show you anything more. I do have the wedge top there. So if we move up here, we have another objective entry to go short. But these are the major trend lines we're looking at. We have the options expected move. Now, I didn't realize it was the rollover for ES. So the point, this chart might change. I got to keep an eye on that. But we're not going to focus on that today. So let's move over to SPY, and we'll spend a little time on here. All right, so SPY, you see this obvious triangle. Because we're focusing on SPY, we trade SPY with the ETF. I know most people do. And so it's very important that I just bring this triangulation. We have the options expected move. The options expected move, again, that's our playing field. I do have a video on the options expected move. I'll link that at the end or up top. And this is, we better respect them because it's right inside our triangle. We get down to the options expected move, down low or up top. You better take off some risk because price can easily reject right off of there and just keep going sideways to fill out this triangle. And so this is what the market is kind of telling us, is that we're moving sideways. The moving averages, the indicators, the options expected move, they're all saying price action's gonna go sideways. Doesn't mean that it doesn't start to move the other scenarios, our primary scenarios, but this is what it's giving us right now. So we're gonna, if price action goes up, which I think it's gonna go up first, then we're gonna take off risk and use put protection and add on to our puts up in this options expected move. Our primary scenario is not even to reach that point. It's to reject right around this gap area. So if we start getting higher, it doesn't invalidate our primary scenario, but it starts to lean towards that this is an impulsive move where we have our A, B, and then a C, probably to fill up some of this gap. Okay, so this is given our sideways action. Now, this is a good opportunity to go to the Elliott wave because this will show you a much, much better point of view of what's happening. So this is, I know there's a lot of information on this page. I try to clean it up. And just on the smallest scenario, our dotted line on the bottom here, that's representing our primary scenario. That this is our impulsive wave 1. We have our wave 2 in, and then on a lower degree, wave 1, and then we're looking for 2, and then a much sharper move to the downside. So we're looking for, we're looking at that this being an A in a Friday, and that we had our B, and that we started to, right off this 50-60% area. It's our golden area, and I'm going to take that out just so you saw it there. I'm going to take that out just to clean this up a bit. We have our A, B, and B can go a little bit further down. I don't think that's the case. And then we start to get our C. Our C is going to represent what's happening. Our C should go right into the 62% area, should try to fill the gap. I think it should fill the gap, and we should get a little bit of rejection here. If we start to just zoom through it, I think that we're getting a much bigger move to fill those gaps up there, and that our wave 2 is going to be much higher. Okay, it's going to be our 1, and then that would be the wave 2 up here. It's our secondary bearish scenario where this dotted line plays out, and then we go much lower. And yes, so what would that represent? We have this triangle. We have a triangle breakout and a fake break. That happens often. Okay, this isn't necessarily a true triangle. Price is in an equilibrium. That's what that's saying. This isn't necessarily, and that's our third scenario, folks. Our third scenario is that this is a true triangle, and that we're trying to move sideways into FOMC. Okay, and so now that you have our first scenario where we reject off the 62, there is a 70 somewhere in here. Let me put that back in there. There is a 78% retracement, and that's still valid too. You know, that's right towards the top of the area, the triangle. So, yes, this can extend. That's why you have to be so careful. You have to be nimble in this market. This is such an important area. We get all the way to that 78.6 and reject from there. It's the same thing. It's just this is our typical zone right at here, the 62. So this is when you start taking really off your risk, and you start checking out what kind of price action happens in this zone. Okay, this is not going to be. This is going to be a big move. Okay, if you're not seeing a real rejection off of here, then it's not happening. It's not going to play around with a 1, 2, 1, 2, 1, 2, all sorts of stuff. This is going to be simple. A, B, C goes impulsively up to the upside and probably stops at this scenario for a wave 4, and then goes higher into like CPI or something, and then rejects. We'll just see what happens when we get to Tuesday evening, what kind of protection we need to add on to the upside or the downside. Okay, so those are the two major scenarios. And the last scenario that we have here is the bullish scenario. So you bulls, sorry, all day long you got to listen to the bearish aspect, but here is the bullish scenario. Yes. Okay, so that would mean that this was just a wave 3 to the top, in that we still have another wave to go to the upside. That's what the bulls want to hear, that we still have a full move to the upside. And this isn't the price range. This is not an estimate of the price range. This is just a representation that we have higher to go. But this being an actual triangle, this is what it's going to represent. All of these moves are going to be 3-wave moves. 3 to the down for A, B, C. 3-wave move for B, A, B. You see where this might get confusing is that price moves up right into our bearish scenario, our heavily bearish scenario, our primary scenario. We fill this gap and we head down to such an important trend line, and we get an A, B, C, a three-wave move to a possible C. So we have to see if this trend line holds. If this trend line holds, then the bullish scenario is more likely. Okay, we'll pull out different scenarios when we get to these points, but if our primary scenario plays out, we still have the bulls that can hold on to this trend line for the wave C, and then three-wave move up for D. So if price starts to head up again, you're like, oh my gosh, what's happening? Don't get all too bulled up, because we could simply be wasting time. Up for a D, down for an E, and then you start making your impulsive waves to the upside. It could be an ending diagonal. It could be anything. It could be, but it has to be five-wave move. A five-wave move after breaking out from this downtrend. That's the thing. And this is not a definite. It typically is, but this can be moved. The only parameter that these letters, these moves, the three-wave move has to show is that C, for example, can't go underneath A. All right? It's not likely to go that deep, but D can't be above B. All right? That takes away, that's not a triangle anymore. E can't be below C. All right? So this is not necessarily the spot. This happens to be the trend line, so it's very important. C is not likely to get under here. If it's going to be a C, it's not likely to get under here, but if it does, and it re-breaks it back into that triangle, then we're probably going to have to move the trend line down to where C is, because then you have to worry about E coming down there. So that's not likely. It's just, those are the rules. You just can't break down from the last point, or break up above the last point, or else something else is happening and you have to rethink what's going on here. But if we're wasting time, this is going into FOMC of next week. We have looking at the bottom here, where we had Friday happen, we have Monday coming up, and then we have all the way to, that's FOMC. Okay, you have Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. So this is probably not drawn proportionally. Price action's probably going to be much tighter than this, but this is FOMC on Wednesday, right at this point, time-wise. So this doesn't represent the time, but this will be getting tight FOMC, perhaps, if this scenario even plays out. If we want to wait for FOMC, not next Wednesday, but the Wednesday after, then this would be the scenario that I'm looking for. But clearly, time-wise, I don't have this drawn out correctly. Okay, that's just about, we're going to go over VIX. And VIX is very simple. We have two things happening with the VIX. We had a gap up. We rejected off of this major support line, off of the 50 range. See this lower trend line down here? We were looking at that when we got our bounce. Got our bounce off of that. Check us out in the options, guys, in the Discord. It's a free Discord, because that's something that I showed in there, is why we were getting our bounce. We knew that we were going to head lower because we got our bounce there. Now, I don't think this gap is going to be left open. So that leaves us up, a little bit higher prices in the SPY if the VIX goes down and closes this gap and retests this trend line once again. Okay, so we're looking for this to close that gap. That means we probably got some higher prices in SPY, but then this trend line will become very important. Do we make a new low? Do we actually backtest this big old wedge, this huge wedge? Do we backtest it more and get a lower low? If we break this trend line here, then I think one of those either bullish or that rising wedge is playing out, and we close the gap on SPY, that island gap. if this trend line breaks in VIX, so you want to keep, you see these arrows, those are alerts. I see that alert start to trigger, then I'm keeping an eye on VIX, see what it does. VIX start to react to the upside, and I think we have our top. All right, and I don't mean like just a little reaction, measly little bounce. I mean, it starts going and gives us a reversal candle on the daily time frame. Then I think we have our top in, and we start heading much lower. And that's it. That's what I want to show you. A lot of information there. I hope this all helps. If it does, if you like this information, you want to keep this going, want to put these out, please consider helping out, going out in the description and checking some of those ways to help. Thank you. Have a wonderful day. We will talk to you tomorrow.